Now, December is that time of year when malls and shopping centres are usually abuzz with consumers, but after what has been a hellish 2020 for many businesses, things are far from normal. The hard lockdown was particularly difficult for retailers, with many unable to afford the rent, forcing them to close shop. And with companies now opting for work-from-home arrangements, the demand for office space has definitely declined. But the commercial property sector is expected to rebound next year. Let's get you some analysis on the story. We're joined now by Nosiphiwo Balfour. She is a property finance specialist at Investec. Nosiphiwo, thank you so much for your time this morning on the AM report.
Good morning, Michelle.
I mean, that's being optimistic, isn't it, that the commercial property sector is going to rebound next year, given that we're in the middle of a second wave and we're looking at a vaccine in the middle of next year?
Look, absolutely. We don't expect a near-term normalization to pre-COVID levels for property across all sectors. And I think more importantly, landlords have had to rethink the best optimization of their properties across retail, office, because ultimately occupancies and rental returns have been impacted given vacancies have risen. And of course, some tenants, as you alluded to, having not survived trade this year.
So when you talk about a rebound, many industries are saying unlikely that it will be in 2021. In this sector in particular, when are we looking at?
So I think we have to break it down because, COVID is definitely, pre-COVID, let me rather reiterate that commercial property was under pressure with rising costs, occupational costs for tenants. And I think that from a retail perspective, this has remained largely resilient given that, many food retailers were able to continue trade during our hard lockdown. But I think that as we also in the December, time where a lot of travel and tourism takes place, and given SA's reliance on tourism, the overall hospitality sector is probably the one that's going to be impacted the most. So when we talk about a recovery or a rebound, and given that hospitality is really largely going to be dependent on the vaccine, given that foreign travel has been massively impacted, we think that, for hospitality that will take some time. Retailers largely remain resilient given that, as we moved into level 1 lockdown, a lot of retailers have come back to trade. But office itself has, had landlords and investors having to rethink, will work from home really be the strategy adopted by many companies going forward? Or will this almost be a hybrid between in-office and remote locations, of course, for many of these companies?
Yeah. I mean, we've seen so many retailers closing their doors, so many restaurants, institutions across hospitality and various sectors. Has this led at all to landlords renegotiating their rental agreements and perhaps lowering their prices so that they can keep their tenants?
So, of course, tenant retention is very big for many landlords. We've seen vacancies increase, with the recent SAPOA statistics, office is sitting at about 13.3%, which is the highest recorded since 2004. Retail just slightly behind at 6.9%. And so it has become a tenant market to renegotiate rentals. But landlords have really come forward. And I think from the beginning of lockdown, there was a working group set up by the commercial property industry where landlords had basically formulated, a sort of structure for tenants to approach them for rental concessions during that period, because ultimately, it's a fine balance between maintaining rental returns and ensuring occupancy, because no one wants to be sitting with empty buildings.
Yeah. So what's your advice, Nosiphiwo, for someone who is in that situation now? Unable to make rental payments, hoping that their business will indeed make it through COVID-19. What are my options?
So I guess the options are really specific to tenants in line with their lease agreements that they have with their landlords. I do think that, between landlords and many tenants, there's been progressive, inputs from both sides to ensure that there's business sustainability. I mean, we're sitting with rising unemployment levels, and I don't think that many landlords also want to operate in a market where at the same time where they don't have staff, they're not going to be able to operate. So I do think that it really lies within those lease negotiation discussions and ensuring that, there's going to be tenant retention from the landlord side, and also, I guess, the sustainability from the tenant side.
I mean, if we were to look for a silver lining, would that be it? That, as someone occupying a retail space, for example, that I might be able to get that sort of A-grade space at a much reduced rental?
We are seeing rental, downward pressure, especially in the office sector. I guess since March, we've probably seen about, 350,000 square meters of office space coming to the market. So definitely tenants can be a bit more discerning about the space that they operate across retail and office. And ultimately, it's down to the negotiations that they can make, across whether it's P grade, A grade, or B grade space. But we're seeing a slight pickup in vacancies across that board. But definitely, it definitely is up to the tenant who has options available for them.
Well, thanks very much for your time this morning on the AM Report. Nosiphiwo Balfour is a property specialist at Investec as we continue to unpack the effects of COVID-19, certainly related to the commercial sector. Thanks again.